This is Trading Day, the final count.
Hello and welcome to the final count. Visions in blue, as you can see. It was totally coincidental. I'm Helen Dalley.
And I'm Carson Scott. Yeah, whatever. Okay.
Great to have your company. But we're also joined in the studio. Junbei Liu from Tribeca joins us. Junbei, good to see you.
Good to be here.
And also we have Michael Wayne, the Managing Director of Medallion Financial, also with us in the studio. Good to see you, Michael. Well, now let's, before we get to our panel, let's take you through the market moves this session. The ASX, it really struggled today. It was hovering around that 6,000 mark, went down, got back up to it, and actually closed down at 5997, down 14 points today. If we have a look at the different sectors, Carson, infotech and consumer staples were both very strong, but it really was the financials that pulled the market back.
Yeah, and back into that bottom position, almost CBA today. It was interesting in Matt chart how ANZ, some selling stepped up there, and not sure too, so it wasn't quite relegated into last position, but it's been one of those weeks again that we're reminded any bit of bad news via these regulators, these policemen on the beat. Struggles CBA to punch above its weight.
Yeah, exactly. So if we look at how many rose and fell, 68 stocks rose, 120 fell today, and 12 held steady. In terms of index weight, the biggest movers in index weight, Transurban Group led the market high, up almost 5 index points. Rio Tinto also was strong. Woolies, Caltex and Tabcorp rounded out that group.
Been a big week for Tabcorp with the TATS votes going through that way, delisting for TATS, and also a big week for Caltex and Woolies. You wouldn't know it from that chart, but in a sense, Caltex, the victor in that tussle for service station ownership that's thwarted, but now BP.
Yeah, and also Citi gave them an upgrade today. So let's bring in our panel because it... Oh, did we talk the bottom movers? No, we didn't. Sorry. Commonwealth Bank was in the group there of... This is still in index weight. It was down 3.2, 3.3 index points. ANZ, Westpac, Centre.
Interesting to see Centre on there. What has been a massive, massive week on M&A front for retail, for media, and of course that's the satellite that was spun off by the Lowies a few years ago to house their ANZ assets.
Yeah.
And then with more questions than answers argument.
Yeah, no, it's interesting that that's in that group. But let's get to our panel now. Junbei, where shall we start? Let's start with the really big stories that
Absolutely.
Well, you know, I guess the really kind of emotive and interesting ones from many people's points of view are the Lowies selling out and Rupert Murdoch selling out. Now, many people have said both of them kind of symbolise this is the top of the market. They can see that so much disruption is happening. The market is changing in their various industries so quickly. They picked the top. What is your sort of general summation of seeing these massive deals happen this week?
I certainly feel with the Lowies, it does feel certainly top of the market. It's much easier for them to sell the rest of their holding in the combined group than the Westfield holding before this deal took place. Certainly he's taking money off the table, and of course there is rationale behind putting the business together. It'll be stronger defending against the likes of the Amazon, but that is still waiting to yet to be seen. And we've seen the share price of the offshore Unibail of the share price is actually been falling. So the shareholders aren't convinced that this is going to be a great deal. So that is to show, a lot of shareholders are taking the view that
WFT falling as well, by the way.
Yeah.
Ends this week. Fell today 1.5% to $9.35.
That's right.
Yeah. It's not a given, Michael, is it? Let's not forget they own roughly 9% of the group. And it's fair to say that that's a fairly influential block of it in itself.
Of Westfield?
That's right. I mean, the Lowies own that percentage on Westfield, so it's not just a given that everyone else doesn't say this is on the cheap, we want more.
Well, there's still a little bit of water going under the bridge, but they do trade at a premium relative to their peers. I mean, Westfield has been under a bit of pressure this year. I think they're having their worst year since 2011. Although they are selling out at a big premium, it's certainly not at the peak or the top, because Westfield has traded substantially higher in the past. But we all know the story surrounding these type of assets now. You've got the specialty retailers, the Zaras of this world, the Topshop, the Uniqlo have come in. The retailers that would typically take up space in these Westfield centres no longer can afford the rents. Historically, these rents have been pegged to inflation. We know the situation with inflation, not only in Australia but around the world as well. So So the time has come for them to sever their ties with the business to some extent, but I think it is poignant that they still are maintaining some exposure, and that's the same to be said for Murdoch as well. It's
well,
not...
that, as Junbei said, it is quite a different sort of... I was lumping them both in because they've both been iconic Australian businessmen and families that then have built businesses up virtually from scratch. Rupert Murdoch was obviously given one paper by his father, but the Rupert Murdoch, as you said, Junbei, is staying very much in, and it's no cash offer, so it's all scrip. And so how do you see that deal?
Well, I see that deal. I think he is very much want to maintain his exposure to the media space, and he's very much of the belief that there is a huge amount of future that is to happen, and whether through, but content obviously is a very important thing for him, and that's why, you know, he's been incredibly successful in creating the Fox brand, buying up all the content businesses, and now merging with Disney. I think it's.
I mean, scale is surely the. It's not good enough just to have content though. You've got to be able to scale it in the way
and distribution
Amazon
as well. That's
and
right.
Netflix.
I think that's what we sort of took away from this deal is he's maintaining his exposure to the non-scripted entertainment and those Fox assets, and the scripted entertainment's going off to Disney, who can now have the size and the scale to compete with the likes of Amazon and Netflix, which has been sort of well covered. But I think that's the big takeaway. He's been always a newsman. That was one of his comments through and through, with a bit of an entrepreneurial streak, and he's going to maintain that exposure.
It's also clarified succession planning that big concern that runs through all stocks is that key man risk notion, and until now it's been unclear as to who was the natural fit to take over eventually from both a Lowy perspective and a Murdoch perspective. Well, this week indeed out of London, Rupert was saying, I very much intend to be executive chair at the new Fox, as he's dubbed it, with Lachlan, who I very much hope will be the incoming chief executive of that. So if that wasn't a clear demarcation as to roles, I'm not sure what was, and that should be welcomed in terms of clarifying the succession in that entity, if nothing else, as well.
And it does seem very clear also, doesn't it, Michael, that James Murdoch is, he's going to look after the merger, and then there may be a role, there may not be a role at Disney. It was very unspecific by Bob Iger, wasn't it? And he's staying on till 2021.
Well, he might go down a similar path to one of the Lowy sons, who manages sort of the family's wealth, who's out of the spotlight, out of the media. There's a lot of water that go under the bridge, I think, in that regards. As to Lachlan, it does look as though he's going to maintain the family role and the continuity in that respect. So, but time will tell with these things.
All right, just one aspect of that business deal that a number of people perhaps have missed is this access that Disney will now get, Michael, to massive audiences in both India, we know, but also in Europe.
Yeah, through the Fox. I'm not sorry, the Fox. I think it is. What's it?
Well, a Star in India is not, and Sky, obviously.
And then the Sky and then Fox in Europe. So that's what it does. It opens up a new market for them, and that's the size and the scale that everyone's sort of been talking about. The fact that this now opens up markets and really takes the Disney brand internationally, as opposed to being that US-centric.
TV is not their core operations either, so it's entirely foreseeable they may sell down some of those what I regard as peripheral to their core day-to-day. We can't rule that one out either in the fullness of time, so that'll be interesting to see how it plays.
And also whether the new Fox, as you said, Mr Murdoch talked about, whether that will eventually, he didn't close the door on that, whether that will eventually be sort of put back together with News Corp.
And then taken private like it was 6 decades ago, as the final kind of full stop on proceedings. That's all ahead. We're just speculating wildly. However, it's interesting. I mean, clearly it's invited
really
all of that.
Interesting. And can I just digress slightly, because I'd like the panel's view on this. I spoke to Shaw and Partners Chief Investment Officer Martin Crabb, as we do often on our programs on this network this afternoon. He was talking about that there are there are a number of fairly clear signals that could point to that we may be just preceding a crash. And he talked about, you know, Mr Lowy and Sir Frank and Rupert Murdoch selling out at the top. He kind of equated that to Kerry Packer selling to Alan Bond, sort of pre a certain crash. The Schiller PE ratio, he also talked about, it's at very high levels, like 1929. I mean, I said to him, you're just depressing us all. But it is interesting, the Bitcoin mania also sort of then led to, well, you know, Tulip mania and all that led to a crash. Are there warning signs for you, Michael?
Oh, look, I think you've got to be cautious 8 years into the bull run that we've had. These are certainly contrarian indicators for those looking for these sorts of indicators, but the poignant thing for me with both these deals is that both these families still retain some exposure.
Exactly.
Like all investors, I think you should be sort of looking to maybe take profits off the table or reduce your risk as things run up, and they're doing the right thing, in my opinion, by reducing their overall exposure to a certain sector.
Right.
But they still remain invested to some extent.
Right.
I think that's poignant.
Yeah, just before you go on, Carson, Jinbei, do you have a view on that?
Yeah, well, absolutely. Look, it's certainly, pick up in M&A is always indication of a late-stage bull market, isn't it? But because of the changes in the bond yield, we are seeing that happening. But if you look at the actual economic condition globally, it's actually picking up everywhere. It's improving offshore, improving emerging market. Australia is improving, but it's just a matter of time. So we don't see that crash coming yet.
Okay, let's talk not so much a crash as a curdling on sentiment now when it comes to A2 milk, because this has been a story that was looking fresh and fresh and fresher, was it not? Week after week after week.
Fresh and cold,
It was.
Yeah.
But then, to round out this week, kind of almost lost in all that other deal making, was news, right, that after 7 years with the group at Qantas, and in very much the driving seats, in the cockpit, and following on a direct succession path that Alan Joyce had followed from Jetstar, running that to the top job for the group itself at Qantas. No, Jane Herdlicka had been moved into Qantas Loyalty. That was seen as a sideways move, but you could read now, perhaps even seen as a demotion in her eyes, because Gareth, who had been CFO, got that Qantas role, the Jetstar role. It's all now A2.
So, Michael, how do you see A2 have appointed her CEO, not to come in for some time yet to come, but she has been given this top job?
Yeah, well, Qantas C-suite is seen as a bit of a blue ribbon board in Australia, and perhaps A2 Milk see it as a necessary next step for them to make it to the big league. So they've gone for someone who's got a lot of experience in a different industry. It's hard to draw a complete direct correlation between the two, other than that she does bring a wealth of experience to a business that is looking to expand and make a global footprint.
Both deal with customers.
I think they have dairy farmers on board, though, in terms of milk, not A2, don't they? They have the dairy farmers.
I don't know. I don't look at the brand of milk. It's fantastic. Just for what it's worth, I would say it's fantastic for Jane Herdlicka. She clearly thinks she has a lot more to do in the CEO role. Perhaps that wasn't going to come, as Carson said, at Qantas. So she's gone to one of, I mean, you know, A2 Milk has been a stellar performer. It may not always be that.
That's right.
And is this the same as Telstra with Andy Penn, an outsider to the industry coming in?
All right,
well, let me give you fresh.
Yeah, see, the question is, you know, she will bring fresh perspective and she'll bring this experience. So whether she will be there to take A2 from a fast-growing small business into the next stage of a well-managed corporate to go multinational. Right now, they're really just a China stock. So whether she could do that, it will be challenging.
Is it just a China stock? I mean, that's slightly unfair on it. I mean, it's into the UK, it's into Singapore.
That's
There's
right.
product going up every night to Singapore from Victoria.
Absolutely.
$7
China still drives majority of its growth, and all that valuation come from the China growth. It's a so that's where she needs to go.
It only generates, I think, about 10% of its earnings directly from China. But to her point, it does generate the vast majority of its growth from that one region.
For the region, I mean, it's important to stress that it's very much into Singapore with the expat community, and it's going into Malaysia, and it's got the UK bridgehead down pat, and North America.
That's
so
right.
It is evenly spread.
So I think
it pains always to say.
Yeah, it's important for her to take to the next stage and more diversified. That's what the company has been trying to do, because China's been doing so well, and in terms of the growth, it's a majority of valuation.
So start by getting it on board Qantas.
Sorry?
Get it on board Qantas?
That's right.
She might want to have a clean break. All right, we have still got a lot to talk about, including when we come back from this short break, the top and bottom movers today. Welcome back to the final count. Let's get straight into looking at, by percentage change, the best and the worst performers today. Now, Transurban, Main Farmer, Crown Resorts, interestingly, after that news we were talking about yesterday afternoon, Carson, on fixing up a few of their things that they're going to pay down some debt, Oz Minerals and realestate.com. all in that top movers group.
Yes, payday again for certainly our Gretel, it was said too, on that measure. Some down days on these 5 stocks. Animate through here, there and everywhere. Retail food group, a week of woe. We should maybe touch on that if we've got time. Macquarie Atlas, the number of short positions in that stock absolutely went into overdrive this week, I can tell you. Indeed, it had the largest one-day increase in short positions as a percentage of the free float on the ASX 200. That's a Bloomberg stat on Macquarie Atlas. Flexi Group and Fairfax to round up. Proceed.
Yeah. So, Michael, how do you see... Well, let's talk about Retail Food Group briefly. I mean, those allegations were very, very serious. They've been down... look, I can't remember the percentage each day, but they're now down almost 5% again today.
Yeah, so they got hammered on Monday after the reports emerged on the weekend.
Franchisees?
Franchisees having the issues there. Appear to be losing a number of franchisees. They appear to be losing money, a lot of them.
They're alleging they're being bled dry by Retail Food Group.
And this is a company that has run up a lot of debt in recent years through their growth by acquisition model. So at a time when they've got a lot of debt, they're obviously struggling to invest into the renewal of the brands that they've got, and they're obviously going through a fairly tough period.
So the 7-Eleven syndrome, we might call it.
Where they're expanding too quickly.
And then losing track.
And then, well, that's an issue that's emerged with a lot of these food outlets, whether it be Domino's are conducting their own internal investigation. I'm not sure whether much emerged or not, but yeah, it's a business that looks cheap on the face of it, but it's turned out to be a bit of a valuation trap because it's continued to fall away.
They use that same expression, June Bay, when it comes to Myer, in terms of the value trap that even buying in at these levels could present. Certainly that's the claim that Solly Lew made months back when he bought in on the understanding of better times ahead. This week, a reminder that those better times have proved ephemeral. The new Myer has been rejected wholesale by consumers, and this should be rain-making territory now. That we're in the final furlong before Christmas. They're tripped up.
And it's not happening for them. And, you know, they should be knowing exactly what the Christmas sale will be. But one thing that potentially could save them for this Christmas is that there are 2 trading days ahead of actual Christmas. So retailer tells me it's very important. So you have 2 days.
Comes down to calendar days.
All right, look,
both weekends.
Yeah, the 2 weekends still left, of course.
Yeah,
but
so
isn't it also Boxing Day sales and after Christmas is so important to department stores in particular?
That's right. For Myers, it's essentially the whole month of December will be very, very important.
But they know it's a write-off now, don't they?
They know it's a write-off.
They told us
it's terrible.
this week.
Yeah, and going forward to you know, the next half, essentially the next half, there's no way they can make up whatever the sale they promised, and even those revised target they gave earlier may even miss. So that's going to be very challenging.
I was speaking just earlier after 3 to Sir Michael Hill, who was the founder in 1979 of the Michael Hill Jewellers and now Michael Hill International, which is listed. So interesting. He was very candid about how they have had to dramatically change their business to really cope with all the changes in retail. And we started out talking about that with Westfield perhaps. But he said the online shopping, not just Amazon, but online shopping in the United States, where they have had to close stores since the GFC, so that was that recession. But online shopping, he said, has been hideous. That was the word he used on them, on Michael Hill. He also was talking about that people with engagement rings, he sells a lot of engagement rings, people shop around online, but they will come in because it's still a very emotive buy. But as a way to try and combat Amazon and just the whole disruption in retail, he said they're going to not offer other people's products, but they're going to offer his designs, his wife's designs, and his son's designs.
So make it all in-house, no third parties.
And that helps make them a brand. But he was talking about Alibaba. He lists on Amazon too, Michael, and Alibaba, and he said China could be huge, but, you know, carefully, because they love a brand.
Is there a lesson here with Oraton? Heaven forbid, where they went big into Asia, they said we won't be discounting, we're going to make this the house of quality without compromise.
Well, I mean, Origin, their problem probably wasn't that they didn't concentrate enough on the Origin brand. They tried to bolt on things like Gap, for example. Once they lost the Ralph Lauren contracts, they had things like Brooks Brothers, which never really took off either. And for Origin, often it was just the umbrella that everyone knew, that pattern or the wallet, and they didn't focus enough on that brand. Perhaps perhaps Michael Hill have identified that similar issue early, and they've decided to focus on that home brand and make it a family-oriented.
Is it on your
business.
list? I mean, what would make you consider a Michael Hill International for clients?
It's just a bit too temperamental, these consumer discretionary companies at the moment. It's very difficult to be able to predict the earnings with any certainty. There are obviously structural issues at play at the moment.
But then again, marriage, engagement, I mean, this,
well, the thing is, if it's not the online threat, it's the currency's an issue. There always seems to be an issue with these retailers.
Yeah, well, so look at retail. For many great investors, they have said it's a great place to make money because they're very cyclical. But what's interesting and challenging is to find the ones that will last, that will it will endure, you know, and then to have a great business model.
So who's on your list? Who's on your list?
Certainly the Oriton.
Right, retail food group?
No, certainly not retail food group. Look, you look at the ones that have real business models, like the JB Hi-Fi's, you know, like the look, you know, thinking about not even Premier, it's more Smiggle within the Premier that has a proper. They engage with the consumer. People, there's something that they have. The consumer wants to walk in. If you walk into the Myer, you just don't know what to buy.
Do you worry though that Solly Lou is too blindsided in this? You know, he's made it personal now. This quest to get hold of Myer.
I agree.
He'll take his eye off the prize that is really Premier.
That's what I fear. That's what
Making that great.
It's either what I fear, or either, or there's conspiracy theories that he's trying to take people's attention away from his certain performance of the other brands, the JJs, the Portmans, and all of that. They are struggling. So
it's a cash box for Smiggle and
that's right. And Smiggle's great. It's doing great, but it's still too small for that business.
All right, can we end on something positive, which was the jobs story this week? A fantastic jobs view. But if wages sort of don't start catching up a bit, Michael, would you say that all these retail that we're talking about, consumer discretionary, I mean, that ever sort of enlarging household debt will really keep impacting?
That's the issue. We've got low wage growth, but we've also started to see housing prices come off the boil a little bit. So consumers were at one point there delving into their savings to go and fund consumer spending. That seems to be pushing the envelope. If that was to continue to happen, you can't just keep delving into your savings forever. So if housing prices do continue to fall away, albeit not alarmingly, I think it will put a bit of a handbrake on consumer spending and consumption. So that's something certainly to keep an eye on, because the savings rate has already come down from above 10% to below 5%, and it's unsustainable, particularly if housing prices deteriorate.
Woolies rallied to end the week, and speaking of money to spend or otherwise, that is one of those staple stocks traditionally, and as much today as it was yesterday.
They had this blow with the ACCC.
Well, they did, although really shaking it off to end the week. Well bid. How do you understand that?
Yeah, look, it's surprisingly, everyone's expecting it to be down a lot more, but clearly people buy into as it's still performing pretty well against coals, and apparently food inflation with signs are coming back. Because Coca-Cola put through their prices. And everyone else have put through their prices, and retailer had no problem of passing these through. You've seen both Coles and Woolly done that, so potentially that's coming back, and that could be very positive.
Margins, here we come.
We do have to call it a day. June Baillieu from Tribeca, thanks for joining us. And Michael Wayne, thank you so much for joining us as well from Medallion. Stay with us. That's it for us for tonight and this week. We'll be back next week. Tickie's coming up right after this break.